The broadcast is now starting. All attendees are in listen-only mode.
Welcome everybody to Naked Trading Mastery webinar. For those of you not familiar with my voice, my name is Thomas Wood. I'm a partner here at Basecamp Trading, also the Director of Trading Operations. And today we're going to be covering some really good information about price action trading and specifically market manipulation, how we can spot it, why it happens, and how we can benefit from it. And it's a price action setup that occurs all the time. It's what we call a run stops. So we're going to be going through a lot of good information today, but I want you to understand that at the end of this, I'll show you how you can take the next step and say, okay, if you enjoy the information, you want to learn more, I'll show you how you can get the entire workshop for the price of a cup of coffee. For those of you who say, great, you want to do it? I'll show you how. For those of you who say, you know what, not really interested, that's all right. Hopefully you learned something today. I'm always going to try to teach you if you're taking time out of your day to spend with me. The other thing I want you to understand is, yes, I'm going to teach you good information today that you can take and apply to your trading right away, but you need to realize that success doesn't come overnight. You're not going to come to a 1-hour webinar and then all of a sudden be the world's most profitable trader. Okay. It takes time. I always tell everyone, look, most traders overestimate what they can do in a year, but drastically underestimate what they can do in 5 to 10 years. Okay. So don't be in a hurry. You got to understand it takes time to get there. So with that being said, before we get into the good stuff, we have to go through the risk disclaimers. Just keep in mind, trader investing carries a high level of risk and is not suitable for all persons. There's no such thing as free money, all right? There's always going to be a potential for loss, and there's no such thing as a strategy that works 100% of the time. Anybody that tells you there is lying to you. You should run pretty fast the other direction, all right? The other thing we tell everyone is, look, when you go to learn something new, there's a learning curve, okay? So start off trading simulated. If you cannot make money with fake money, you're not going to make money with real money. Learn it with fake money first. Once you can consistently show profitability simulated, then you transition to live. Because when you start off simulated, A, you're not losing money, but B, it also helps remove your emotions. So it helps you build good habits of how to trade correctly. The other big thing is when you do start trading live, only trade with risk capital. So what do I mean by risk capital? I mean, don't go take your son or daughter's college fund and start trading with it. It's money that you can't afford to lose. So only trade with money that you don't have set aside for something else. It's play money, so to speak. That way, twofold reason. If you do lose it, it's no big deal if it's risk capital. But B, it's going to take a huge emotional burden off of your shoulders because you're not going to be sitting there going, I have to do this right. I can't mess up. I have to make this work. All right. Then along those same lines, we're required to show you CFTC Rule 4.41, just a hypothetical disclaimer saying, look, past performance is not necessarily indicative of future results. Obviously, I cannot show you examples from the future, although I wish I could, because that would be pretty awesome. But with that being said, we trade these types of setups every single day. That's one of my favorite types of setups we're going to talk about today. And we've been using it for years and years and years. Okay, so let me tell you something here. Most traders, when they first start trading, they actually, although everybody's heard that statistic that 90% of traders fail, 95% of traders fail, most traders actually don't fail right off the bat. What they do is they start off, and this is an equity curve that one of my members sent me a couple years ago, and he started off making money, and then it started to slip, and then all of a sudden he just blew up. And that's what most traders end up doing. They start off, they make a little bit, and then all of a sudden they just give it all back and more. So the thing you got to remember is, as a trader, we're looking for consistent results, and it doesn't have to be this way. Okay, we're looking for consistency and longevity in the types of strategies that we're trading. So, for example, this right here is Michael Galloway's equity curve. He's a guy that's done a one-on-one mentorship with me, went through it, started off sideways, and then we started getting things lined up, and as he started to learn more and more, his equity curve kind of smoothed out and just steadily worked its way higher. This is Dave Glissmeyer. Dave, the same thing. He came through and did a one-on-one. He ended up getting very, very smooth, consistent equity curve. And this is what we're all about. We're not trying to hit the home run. We're not trying to get rich off of one trade. It's consistency over time. This is Sherry's. Sherry's equity curve is beautiful as well, and she's continuing to do well. She's just printing money, trading one contract at a time. Okay, so keep in mind the goal and what we're after is consistency and profitability. not necessarily trying to knock the cover off the ball and get rich in a week or two. All right, so remember that. Like I said before, most traders overestimate what they can do in a year, but drastically underestimate what they can do in 2 to 3 years. So with that being said, you're probably wondering, who am I? So let me give you a little bit more information about myself. This is me, Thomas Wood, and my beautiful wife, Dora. And there's a couple elephants in the room that always come up. All right, so let me go ahead and address them because I know you're probably thinking them. First off is, Thomas, you're really young. So yeah, I'm pretty young, but I've been trading since I was about 13, 14 years old with real money and have already spent more time trading with real money than most people will in a lifetime. All right, it's all I've ever done in my professional career. It's what I do. Now, with that being said, the other thing is, well, Thomas, if you're so good at trading, why are you taking time out of your day or your week and teaching people? Why do you teach people if you're so good? You should just be sitting at home making money. And that's correct, but at the same time, you got to understand why I got started in the industry in the first place if you want to understand why I'm so passionate about helping other people learn how to do this. So the whole reason I got started trading in the first place, my father is the one that got me into it, and he owned a construction company. And he said, look, Thomas, you don't want to be doing this backbreaking work that I'm doing every day. He said, if you want to have the money that you want to make, and you want to have the freedom to do the things you want to do and spend time with your family that you want to spend with your family, one of the best ways to do that is by trading. And when he went and started trying to learn how to trade, he ended up losing hundreds of thousands of dollars following these quote unquote gurus out there that, in my opinion, had no business teaching anybody how to trade in the first place. And I thought, you know what, that's not right. And I wanted to become the exception to the rule and really help people and show people, look, this can be done. Anybody can learn how to do this. You don't have to be some Ivy League graduate mathematician in order to consistently take money out of the market. So I wanted to get into the industry to help people like my dad learn how to trade. Now, with that being said, us at Basecamp, the partners here at Basecamp, we have over 40 years experience in hedge funds and professional money management. We're a trading technology and education company. We have patented trading tools that's been featured on Bloomberg, CNN Money, Barron's Money Show, Traders Expo. We've been speakers around the world at all these different events, been speakers up in Bloomberg and stuff. And I've done consulting with multi-billion-dollar funds as well as thousands of retail traders around the world. All right. And one of my most proud accomplishments is I can say I've helped a trader go from consistently losing money, a retail trader, go from consistently losing money to literally running their own bond fund. And I'll show you that person's equity curve here in a little bit. And when I say that, our strategies work. Okay. Trading is what we do. This is a brokerage statement from one of our funds in the past, showing about $4.8 million in the current month and about $7.6 million year to date in gains. This is another broker statement from an account I was trading a little while ago as well, showing $30-some thousand in gains in a single day. Okay, so we are traders. We wouldn't teach it to you if we didn't trade it ourselves. All right, so with that being said, what are we going to be talking about today? Okay, what are we going to be discussing? So we're going to be talking about what is naked trading. So naked trading is referring to trading based on price action alone. We're going back to the basics, going back to the fundamentals. All right. You don't need any indicators to identify the setups. And keep in mind, most indicators are based off a price chart anyway. So why not just learn to read the price action yourself instead of having to use an indicator to do it? Now, some of the best traders in the world have one thing in common. Okay. They have a very strong foundation. They have good fundamentals. And that's one of the main things that we're doing here at Basecamp is we want to make sure that you start off with that foundation, those strong fundamental games, so you understand how to read price charts. And that's what naked trading is all about. And that's what we're going to be talking about today. So keep in mind, today we're going to be covering a few different things. We're going to talk about how do you define a trend in any market and time frame. All right, that's the first thing. I always start off with that because it's so simple, but it's something that's missing drastically from a lot of traders' trading toolbox, so to speak. And with that being said, one of the easiest things you can do to help increase profitability, start trading on the right side of the market. Stop trading against it. So I always cover how you define a trend and how you determine market direction. Then we're going to talk about identifying entry opportunities within the context of a pre-established bias, aka within the context of the trend. And then we're going to talk about trading what we call the run the stop setups and how that works. What's the run the stops? Why is that happening? How do we take advantage of it? How do we identify it? All right. Now, today we're going to cover this, but again, you got to realize that real change only comes from a long-term relationship. You're not going to come here to a 1-hour webinar and all of a sudden you're the world's best trader. It doesn't work that way. But by the end of the presentation today, you should have a pretty good idea if this is a good fit for you. And like I said, I'll show you how you can take the next step, get the entire workshop for $7. And for those of you that say, yeah, I'm ready to go, great. I'll show you how you can do it today. If you don't want to, no problem. Hopefully you learned something and you enjoy your time here today. Alrighty? So one thing I will tell you, if you have any questions at any time throughout the presentation today, feel free to ask them via the questions box. I try to answer as many as I can, and at the end we'll do full Q&A and everything as well. So again, just feel free to ask anything, and then also make sure you're paying attention, because one of the things I like to do is quiz you as we go to make sure you're following the concepts and understanding everything that we're discussing. Make sense? So let's dive in here. How do we define a trend? Okay, and I've actually taught this to fund managers that are managing tens of millions of dollars. And they said, you know what? I've never even realized it, but that's so simple. And that's probably the best way of describing a trend I've ever heard. And he said it's game changing for the way that he trades. Now, he was already a profitable trader. Like I said, he was managing a fund with tens of millions of dollars in it. But I thought it was kind of interesting that this simple concept was never understood. So that's why I always like to start here. All right, so the first thing you need to understand, when we're identifying market condition, we're not looking at a single price bar in relation to the next. We're looking at pivot points. We're looking at turning points. Okay, so don't get sucked into the getting too close and too narrow of a focus. You want to pay attention to the larger moves that the market's having. Okay, so all a pivot point is a turning point in the market. All right, it's any level that price has moved up to and then was rejected from. So if each one of these lines here are a price bar, and we went up like this, and then we came back down like this, that would make a pivot high. And then if we turned and came back up again from the low, like that, that would make a pivot low. But I want you to notice that it's several bars up, several bars down, several bars up. All right? Now, when we're looking at pivots, we want to normally see at least 3 or 4 price bars up and down, leading up to and then away from that high or low of the pivot. So again, don't look at one price bar down and then one price bar back up and say, hey, there's a pivot low, because that's not the case. All right, big picture. So this is what I'm talking about. This is a 60-minute crude oil chart, and this is just for example. We have a pivot high and then pivot low, and pivot low here, pivot highs up here, pivot low here, pivot high, pivot low, high, low, high, low, high, low. You see, it's the big turning points we're looking at. And one thing I want you to notice, when we look at this, we're going here to here to here to here to here to here. All right, and we're ignoring these little tiny turning points. All right, don't get caught up on these little tiny blips where the market goes down and up just 1 or 2 price bars. That's not what we're paying attention to. That's not what we're watching for. Again, watch for the major turning points. This is the number one mistake most people make when they are trying to identify a trend. That's why I keep harping on it. So with that being said, how do we define a trend using pivot points? Well, you need to understand that the market's always trading in one of 3 ways. Okay, one of 3 categories. It's either trending up, trending down, and if it's not trending up or trending down, it falls into the 3rd category, which is consolidation/reversal. Okay, now when we're trading, we ideally want to be trading during the trending environments, because that's when the market's moving. It's when we make the most money. So the way we define a trend, an uptrend, is defined as higher high and higher low pivots. So you can look at it like a math problem. Uptrend equals higher high plus higher low pivots. And just like a math problem, if you do not have one half of the equation, then your equation is no longer true, and it's not a uptrend. So keep in mind, we have to have a higher high, meaning we have to have higher prices than the last pivot high, and we have to have a higher low pivot. Okay? And as long as we continue to put in higher low and higher high prices on our pivot points, we stay in an uptrend. Now a downtrend, pretty simple as well. It's the exact opposite. It's lower high and lower low pivots. So the market's trending down like this, where each swing low is lower than the last pivot low, and each pivot high is lower than the last pivot high. Okay, and just like a math problem, once again, if you miss one half of the equation, it's no longer true. You have to have lower high and lower low. Now, that's a good question, Danny said. What time period are we looking at for this? So remember, trends are time dependent. The longer the time frame we're analyzing, the larger the trend. Okay, so if we have a daily uptrend, it might last for several weeks or several months. If we have a 30-minute uptrend, it might last for several days. If we have a 2-minute uptrend, it might last for a couple of hours. All right, and we can have a 2-minute downtrend within the context of a 30-minute uptrend. So just remember, the time frame that you're analyzing is the time frame you want to pay attention to. So if you want to look for bigger swings, you want to catch the bigger moves in the market, all you have to do is pay attention to a larger price chart. If you want to scalp and take short-term trends, look at like a 2-minute or a 5-minute price chart. All right. Now, everything else falls into that third category, that consolidation/reversal category. So if we do not have higher highs, higher lows, and we do not have lower highs, lower lows, then we fall into consolidation/reversal. Now, then you're saying, well, what time frame do you trade? The number one time frame I use for day trading, I look at a 30-minute price chart to determine direction, and then I time entries using a 2-minute or a Renko chart. So I'll look for a bias on a longer time frame, and then drill down to a smaller time frame to enter. All right. So with that being said, let's take a look at a price chart here. This is 30-year bonds, just on a 500-tick price chart. We have a low here, and then a high, and then a low, and then a high, and then a low, and then a high, and then a low, and then a high, and then a low. So really quick, at this point right here, here's your first quiz. Which direction is the trend? Which stage of the market is it in? Based on what you just learned. Up, neutral, up, consolidation, reversal, up, 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 up. So the answer is it's in an uptrend. So why is this still an uptrend? Because if we look at our high, low, higher high, equally low, low, higher high, higher low, higher high, higher low, we're still coming up. We haven't had a lower pivot high. Remember, don't pay attention to the short-term moves like that. You got to look at the big swings. All the way up, higher high, higher low, higher high, higher low. And we continue to climb higher highs, higher lows, all the way up until this point where we put in a lower high and then we break to a lower low. Does that make sense? And this is why understanding trend is so important, because so many traders get out of a position at a point like this when all this is just a regular retracement within the context of an overall up move. Hayward, that's going to take way too long to talk about today. All right, so let's move on. Let's take a look at another example. So first off, on the left-hand side of the chart, we go low, high, low, high, low, and we're starting to come back up. You're going to learn, you'll learn one way of it today though, Hayward, so just keep an eye on it. Again, I'll show you a full strategy in and out. So by this point here, here's your next quiz. What's the current state of the market? So you guys are still, you're a smart bunch. You got it. It's an uptrend because we're still higher highs, higher lows. So we continue to climb and we go higher low, higher high, higher low, higher high. And then we come up here and we break down to a lower low. So here's your next quiz. What's the current stage of the market there? See, now I caught you. This is a bit of a trick question. Remember, you have to have both sides of the equation in order to make it a downtrend or in order to make it an uptrend. So at this point, what do we have? We have lower lows. But look at our highs. We're still higher highs. So if we have lower lows and higher highs, what's that mean? We go into that consolidation phase. It's not quite a downtrend yet, but it's starting to change. So we're consolidation/reversal by this point. So when do we actually start a downtrend? right over here. This is where we start a downtrend, and now we have a lower low. We bounce up and we put in the lower high compared to that last high, and now we start a downtrend. And then this continues to go lower highs, lower lows until we get a brief blip to the upside, micro trend, and then we continue to go lower highs and lower lows back down. Make sense? Okay, so that's kind of the fundamental first thing you need to understand about identifying price trends. Very simple. Higher highs, higher lows is uptrend. Lower highs, lower lows is downtrend. Anything other than that, anything that does not match higher high, higher low, or lower high, lower low pivots falls into the third category, which is consolidation / reversal. Okay, so let's move on. Let's talk about an actual trade setup that we can use within the context of this. Okay, so what we're going to talk about today is called run the stop setups. It's a false breakout reversal. It's also a lot of times you'll identify as market manipulation. And I don't know if the emails we talked about this, but a lot of times this is big traders, people with lots of money, pushing the market around in order to get a better fill. And I'll explain how that works here in just a second. Okay, so many times a market will have what we call a run on the stops, meaning it will break through a support or resistance, a pivot high or a pivot low, only to turn around and move the exact opposite direction. And what you'll see is a long wick. If you understand what a candlestick pattern is, all a wick is this is the body of our candle here. The wick is just this piece that sticks out down below, or it sticks out up above. You'll see a long wick sticking out above or below the support or resistance. Okay? So when we're looking at this, we'll also call this a topping or bottoming tail pattern. Okay, it's telling us that there's a lack of buyers or a lack of sellers above or below that support or resistance level. Because when we break, theoretically, if the market's breaking through support or resistance, it should start to accelerate, right? So if we break through and immediately turn around and go the opposite direction, it's failing. And one thing I tell all our members is that the market moves the path of least resistance, basically. So if it's not going to be breaking higher and climbing, that means if there's a lot of resistance up there, it's going to go the opposite direction. Okay? And that old adage holds true. Failed bullish will often turn bearish, or failed bearish will often turn bullish. Okay? So we don't want to enter these setups. The one thing you need to understand is once we see the setup forming, we don't want to enter the setup until we break through the lower the high of the setup bar, the bar that runs the stops. And I'll show you what that is here in just a second. That typically means we're actually waiting 1 to 2 price bars after the setup bar to enter. Now, another question that always comes up is, Thomas, does this apply to Forex, or does this apply to equities, or does it only apply to futures? Does it apply to end of day or intraday? Yes. You can use it in all above, and I'll show you examples from a lot of different time frames on a lot of different markets here in just a minute. Okay, so the best reversals, the other thing to keep in mind is kind of the best setups, best run stops, will either have a very long wick or will break the support resistance by 1 or 2 ticks and will close in the opposite direction of a failed breakout. So if we break to the downside, if we have support down here and the market opens, comes down and breaks to that support, we want to ideally see it turn around and close up like that with a long wick to the downside and a close higher than the open. And it'll form like a hammer. Or if it's bearish, it'll form a shooting star. Now, the best stop runs will also reverse almost immediately after the initial breakout occurs. They're not going to spend much time above or below the breakout point. And if you're day trading and you're watching the market move, you'll actually see this happening. So you'll see it break, and literally within a minute, it will turn and go the opposite direction. So it'll break down and turn around and go right back up. And I'll explain what we're seeing there in just a second. So here's what I'm talking about. This is a setup from the other day. This is from like a week ago. I traded this personally as well, buying this long in the S&P. Played out beautifully. But we had a pivot low down here. Okay, so there's 2 parts to set up. We have a pivot low, and the second part is we need to break through that support and then bounce back up and close above it. So here you see the long wick. We broke through and bounced back and close above it. Now, when do we buy? That's the setup bar. Remember, the trigger for the entry is when it actually breaks the previous price bar's high. Okay, so we set up price bar number 1. We set up again price bar number 2, broke through the support, turn around, close back above it. And then number 3 is where we're actually going long. And our stop goes down below the low. All right. So we're not buying until it breaks the high. It's got to trigger. Okay. But everybody understand what's happening here? How we have a pivot low from back here. We're breaking through it. Immediately after breaking it, bounces right back up, breaks again, bounces right back up. It's showing us an unwillingness to sell off down here. So what is occurring when we're seeing this happen? And why is this what we call run the stops? And why do I say that a lot of times this is market manipulation? So what we're seeing is many traders will be buying the S&P, for example, here. They're buying it on the way down. So they're long. And where are they going to place their stops? So if we have 100 people, this is just hypothetical numbers. I'll say 100 people, or I'll say 1,000 people, long the S&P from there. And then they have their sell stops below the support. Okay? So there's 1,000 contracts or 1,000 orders down there that say sell at market if it breaks that support, because they're stop market orders. So if I'm a big fund or I have a large position I want to establish and I want to buy 1,000 contracts, I can't just go click buy 1,000 contracts at market like most retail traders can with just a few contracts, because what's that going to do? If the market's trading right here and I try to buy 1,000 contracts, that's going to push the price up, and now my average fill is going to be way up in this area. Okay, so what do I do instead? I'll start selling. So I'll start selling, pushing the market down. And I know that there's a lot of traders with their stops down in this area below that support. So I'm also going to put a buy order for 1,000 contracts down here. Now it might take 1,000 contracts to push the market down, okay? But as I'm pushing this down, I'm selling, building a short position. As soon as it breaks that support, it triggers all these stops, which now trigger buy or sell at market. For all the people that were long, they're now covering their longs. And I have my buy order sitting there saying, okay, I'll buy all your stops. So now I'm covering my shorts and I'm establishing my long. And by the time I've covered my 1,000 contracts short and reestablished my long, I've bought all in this area. So my average entry is right around here. And I have a much better fill than if I had just tried to buy market and would have had an average entry 5 points higher. Does that make sense? That's why what you'll see happen is we'll break through that support resistance, and you'll see the market immediately break and then bounce back up the opposite direction, because as soon as those orders are triggered, the other orders, the market maker will say, okay, yeah, we'll buy them all, and it'll push the market price right back up. So now the market maker has made a very small amount on the way down, or they've broken even on the way down, and now they've established a long position here that has a great fill to really make their money. All right. So we're kind of riding on their tailcoats when we do this. So let's take a look at another example. This is another one. This was another one we traded in the trading room. This is in gold. Okay. So what do we have? We have a pivot low, nice pivot low down here. And the market starts to break down. Gold drops right through that support, turns around, comes all the way back up, and closes up. Okay. Everybody see? We have now a long bottoming tail, close higher than the open, and our trigger for our long is right there. Now, when we look at a run of stops, we kind of categorize them kind of in 3 categories. There's a grade A, which is ideal. There's a grade B, and there's a grade C. Bs are okay. These are good trades. These are okay trades. These are not really good trades. We're not going to trade those. All right. So how do we decide what grade setup it is? Well, a grade A setup is going to have a couple things. It's going to have that long tail, and it's going to have a close higher than the open. ideally it's going to be just like this, where it forms a textbook hammer. Okay, a hammer pattern, by the way, for those of you that are not familiar with that, that's this pattern right here, this candle. Long bottoming tail, close higher than the open, at the top of the range. The wick is at least 2 times the size of the body. Okay, that's a grade A. A grade B setup would be if we break through the support resistance. For example, let's say this was our low right over here. We have our low coming across. This would be a grade B setup right here, this candle. Because now we have a long bottoming tail, but we have the close lower than the open. So this would be for a bullish setup. We have a close lower than the open, but we still have that long bottoming tail. It's not quite as good because ideally we want to see the close higher than the open where the buyers actually won, or if it was a short setup, we'd want to see the close lower than the open where the sellers actually won the price bar. But in this case, this would be a grade B setup. But we have that long bottoming tail. We just don't have the close higher than the open. And then grade C setup would be if it breaks through the support resistance and then the close is just right above it. So that's not ideal. We don't have a huge bottoming tail. We just have a little bit of a wick poking below the support resistance. We're not going to take a trade off of a grade C. We might take a trade off of a grade B if momentum and other things are aligning. A grade A is a good setup. Okay, so remember the last one was a 120-minute setup in the S&P. This is a 30-minute setup in gold. So let's talk a little bit more about the time frames that we're trading this on. So one thing you got to remember is the larger the time frame we identify the setup on, the larger and longer duration we expect the move to be. Okay, so if we see a run on the stops on a 30-minute price chart, that might play out over the next couple of hours. If we see a run on the stops on a daily, that might play out over the next several days. Okay, and remember that the larger the time frame, the bigger the expected move as well. So where a run the stops on a 30 might make us $500 a contract, a run the stops on a daily might make us $2,000 to $3,000 a contract, hypothetically speaking, for futures. All right, and I'll even go one step further. We can look at a monthly price chart and catch really big monthly moves. And I'll show you one that we had here in the futures room that we talked about for a while leading up to it, and then played out beautifully all throughout the month of October and even made money in November. Okay, now the other thing you keep in mind, we can greatly increase probabilities by trading the direction of the underlying trend. All right, so let's take a look. Here's another example. This is Apple on a daily. Okay, so right here's our first run on the stops. Everybody see it? We opened, broke through the resistance, pulled back, closed down below it. The resistance, by the way, is this pivot high back here. So is that a grade A, B, or C? Here's your next quiz. That's grade A. You got it. So why is this grade A? Because we have the long topping tail right there, and we have the close lower than the open. Okay, forming that shooting star. That's grade A. It triggers right here. Here's our follow through. All right, then we have a bullish run on the stops, which happens right here. Here's our support. 1, 2, 3. We had hit this low several times. Okay, now our trend is actually higher highs, higher lows, trending up, right? And then what do? Boom, right there. We poke down below. For those of you that can't really see it, the wick goes from here up to there. So is this a grade A, B, or C setup? We would be buying the open in the next price bar. And here's our run. It's a grade A setup. You got it. It's perfect. By the way, this is also a bearish run on the stops right up here. This candle right there, which led to this pullback. Now, the other thing to remember, along with the longer the time frame, the bigger the expected move and the longer the duration of the move. If you're trading with the trend, we expect a bigger move than if we're trading against the trend. For example, that's why we had this big move to the upside, trading with the trend, and we had a small move to the downside here and a small move to the downside here. Because trend is overall up. Make sense? So if we're trading with the trend, we would expect the market to follow through further than if we're trading counter trend. All right, let's take a look at another example. This is one I was just telling you about in the trading room. that played out beautifully. This was in cattle. This is on a monthly price chart. So this was a monthly price chart. So we expect the trade to play out at least over the following month. All right. And we had a couple different setup run stops here. The first one, this is the one that happened in September, played out beautifully throughout October. If you look at a daily price chart, it was just basically straight up all month. And this is a textbook grade A setup. Now, there's another thing that's also helping this trade out. So first off, we got the pivot low down here. We break through, turn around, close up. And again, we talked about this weeks leading up to it into the close of that price bar. And we said, okay, it's now triggered and it should be good to go. And we've had a bullish bias and it's just played out beautifully. But there's a couple things also that I want you to notice about this. There's strong seasonality in cattle. Okay, look at what happens every July, basically. So here's July, market's climbing. Here's July, market's climbing. Here's July, market's climbing. Here's July, sold off a bit. Here's July, market's climbing. Here's July, market's climbing. Here we are again right after July, market's climbing. So there's strong seasonality in cattle. So we have seasonality on our side, plus we have a strong technical setup. The best of the best setups are going to have fundamentals and technicals both in agreement. Okay, and in this case, this is a perfect example of fundamentals, which is your seasonality, coming in alongside your technicals, which is the round stops, giving you just a textbook perfect long setup. Okay, then right back here, we had another one a couple years ago. Here was our pivot low. Here's our run the stops. Close higher than the open. It triggers right up here. There's your long, and away you went. Making sense? So again, because it's a monthly price chart, we expect a much larger move, and we expect it to take at least a month to play out. So when you're trading this, you would have used a daily price chart for your entry with your stop below a previous daily low. Yep. Okay. So let's move on. Here's another example. So this is a 5-minute price chart. This is on the Euro US dollar. So the trend is actually up in this case, but then we have well-defined resistance. We tagged it here, tagged it here, we tagged it here. And what do? Boom. We run the stops. Right? Bertrand, I would recommend the workshop at the end. You guys see how textbook this is, how easy it is to spot? Now, is this a grade A, a grade B, or a grade C? We're getting mixed answers. It's a B. This is not grade A. So why is this not a grade A setup? We need to have the close lower than the open for it to be grade A. This has a close higher than the open, but we do have that long topping tail. So it's saying, okay, it's not as good as it could be, but it's not bad. Your trigger is the break of the low, your stop goes above the high, here's your run. Then you actually had another one here, back to the upside, then turned and started the downtrend and continued to run away. Okay? Everybody following along pretty well? Everybody understanding everything so far? Is it making sense? Are you learning something? That's the real question. Like I said, I always try to make sure I teach you something if you're going to take time out of your day to spend with me. All right, here's another example. This is Amazon on a 2-minute price chart. So once again, we have well-defined support down here. We've hit it there. We've hit it here. It's a nice support level. What do? Barely break through it. Turn around, close up. Here's our trigger. Here's our stop. It runs going to the close. It gaps up the next day and takes off. And you could have anticipated that move based on your on the stops. Got it? Does this happen for all instruments? Yep, absolutely. And like I said, this is one of my favorite setups. We trade it every single day. We just had one We just had one the other day. I'll show you a screenshot. Let me see here. Here's a screenshot of Friday's price action in the NASDAQ. There's our pivot low. Here's the break through the low, close higher than the open. There's your trigger. Here's your run. That was Friday, yesterday. All right. So once it breaks the lows, we can anticipate a move to the upside. No, I'm not saying you're not anticipating the move. Don't try to get fancy and get in early, okay? That's a good way to lose money. So don't be going, oh, it's breaking support, I'm going to buy it. No. It has to break support, turn around, close up. Like I said, your entry is going to be 1 to 2 price bars after the setup bar. You get in once it breaks the high. And the reason you do that is sometimes you'll have what looks like a good run on the stops that doesn't trigger. And if it doesn't trigger, we don't trade it. And so don't try to anticipate what's going to happen. So can you see, based on what we've just gone through, how understanding price action itself, these are all just straight up price action setups, how understanding the price action helps maximize your profitability, increase your consistency, and grow your confidence. And by the way, I'm not here telling you that indicators are bad. I use indicators every single day. You just saw one on the chart when I was showing you. Indicators are there to help you. But what I find when I go through and I do mentorships with people and I log onto their computer and look at their screen, half the time they have 50 different indicators on there that you cannot see at all the price chart. And I go, how are you going to know which way to trade the market if you can't even see where the market's going? So like I said, you have to have a strong foundation to then build on. And that's what helps you with getting those consistent results we were talking about. It helps also get you past that over-analysis paralysis where you're looking at so many different things that you can't even place a trade because you have no idea what to listen to, because some things are saying buy, some things are saying sell, some things are saying market's going to go into oblivion. Okay, so what we're trying to do is remove as much noise as possible and give us clarity with what we're looking at. So here's an example. Like I said, I'll show you some more equity curves from traders I've worked with and from members here at Basecamp. This is Randy's equity curve. One's for options, one's for futures. Once again, the thing I want you to notice is consistency. Options, very, very consistent. Futures, very consistent. Now, you're probably saying, well, Thomas, he's only made $10,000. Yeah, but he's only traded 1 lots. This is only over a couple month period. Trading 1 contract at a time. Okay, the other thing I want you to keep in mind is every single one of these traders have a different trading plan. All these examples I'm about to show you, they all have different rules that they're following, but they all have the same understanding. They all started in the same place, which is understanding how price action works, how to read a price chart. That's why I said you got to have that foundation. This is remember I was telling you, helps someone go from consistently losing money to running their own bond fund. Well, this is Lori. This is her equity curve, and it's one of the best looking equity curves I've ever seen. And it's just beautiful, straight up, basically. She runs a bond fund now. This is Frederick's equity curve. He's trading futures spreads. This is another one I always like to show, and I know it's a little older, but it's from Bill. And this is his broker statement. And the reason I like to show this one is because everybody asks, well, Thomas, how much do I have to start off trading? And if you want to get in futures specifically, they say, how much do you have to start trading futures? And I say, well, it really depends. It varies. But for example, he started here with less than $2,000. Started with $1,772.52. And in the month and a half or so he was trading, he was up to $12,642. And just so you know, now that this was a few years ago, now we have the micro contracts, which are like $300 to $400 per contract margin. So they're really low. I actually started a account just to show this. I started a $900 account, so sub $1,000 account, and I'll show the broker statements here in the future whenever I finish. But right now it's at about $1,700 balance trading micros. So I want to show how you can grow a small account using very consistent, simple strategies, risking 20, 30, 50 bucks at a time. Because everybody's always scared of futures. This is Andre's equity curve. Once again, he's trading future spreads, but very, very consistent. That's the thing that we're after. So how many of you are tired of me sitting here telling you how these other traders are successful and you want to kind of become the hero of your own story? Be able to look back and say, hey, look, Thomas is showing my equity curve. All right, so let me show you what we got going on. Like I said, you can get the entire workshop for $7, and this is how. All right, we have the 30-day trader challenge. You're gonna get the Naked Trading Mastery workshop. Now, this workshop, when we originally launched it, was $1,500. You're gonna get access to 3 different live trading rooms. So you're gonna get access to the futures trading room with me during the US session, which is from 8 a.m. until noon. You're gonna get access to the futures trading session with Gary, which is during the London session from 3 a.m. Eastern until 8 a.m. Eastern. You're gonna get access to the options trading session with Dave, which is from 9 a.m. until 1 p.m. Eastern. So you get access to 3 different trading rooms: options, equities, futures. You're also going to get access to the Tuesday evening Q&A sessions. Every Tuesday, we do a workshop, so to speak, or a webinar for members only. It's not a sales webinar or anything. It's just here we're going to come teach you something. And I taught on this topic specifically a couple weeks ago, and another one as well, about false signals and how to determine when a bullish signal turns bearish. But that happens every single week. All the members get access to it. You're also going to get access to the Trading Acclimation course. The Acclimation course gives you, it's about 6 hours long, I believe, and it gives you a whole lot of fundamental information on price action, on momentum, on different styles of trading, on options fundamentals, futures fundamentals, that kind of stuff. We also get the nightly swing trading videos. So you get 2 different videos every night. They give you swing trading outlooks. You get the futures swing trading outlook and the options equity swing trading outlook. So these are swing trades, longer term trades, plus you get the weekly outlook. Every Friday, we do a longer term video that says, okay, here's what our bias is for the entire following week or the entire following month. It's where we do the longer term setups. You also get access to the 2 different chat rooms. You have the chat room in the trading room, and then you also have a separate chat room with Slack where you can go and ask questions. There's traders in there trading anything from a couple thousand to 50 million plus. Okay, there's lots of traders that you can talk to and bounce ideas off and learn from. You're getting all of this for $7. bctnow.com/try. All you gotta do is go to bctnow.com/try. And I want you to understand something. Our best traders have been around for years, right? Like I've said at the very beginning, this is not just a quick short-term fix, okay? It's a long-term commitment. It's going to take you time to learn how to do it. But the way that we do it in the trading rooms, for example, you can come in and you'll learn something in a workshop like Naked Trading Mastery that you'll have access to. Then you come into the trading room, and as you see it developing on the right-hand side of the chart, you can say, hey, Thomas, can you pull up NASDAQ on a 30-minute price chart and tell me if there's a run on stops? I believe there is. And I'll say, yeah, sure, let's take a look. And we'll pull it up, and I'll say, yes, that's a good setup, or no, that's not, and this is why. So you kind of get the feedback and somebody to hold your hand as you're starting to learn how to implement everything you've learned, okay? And it does take time. Now, one of the things I'll tell you is when you first start, the very first thing you're going to want to do when you log into your members area, right here, you're going to want to go to Access Members area, log in right here, Naked Trading Mastery. Start there. All right, that's the workshop. You see when you click on it, it's broken down into bite-sized pieces that are 15 to 20 minutes long each. I guess some of them are a little bit longer. But you'll learn, and then you'll learn each segment. And if you have a topic that you really want to dive into, you can go back and rewatch it. No, the trade rooms are not recorded. I mean, you'd be talking about roughly 16 hours of recordings every single day. So it's too much to upload, render, and host all day. Okay. Now, one thing I want you to understand as well is we want to hold you accountable to what you're doing and teach you to fish, not just spoon feed you trades. Okay, so if you're looking for a place where you're going to come in and say, Thomas just said go long, so you go long. Or Thomas just said go short, so I'm going to go short. That's not at all what we're doing. But if you're looking for a place to come in and learn how to trade and learn why the moves take place, this is a place to be. Because we'll take the trade and I'll say, okay, this is why this is happening. This is what we're looking at. This is why this was a good trade. Okay, And we're here to build a long-term relationship, not just sit here and sell you a product. That's not what we're after. That's why we give so much away for free. All right. Now, if you want to stay a member afterwards, it's $97 a month for everything. So, but what if? These are a couple of things that always come up. So, but what if it's bad time and I don't have the money right now? Well, it's never going to be the quote unquote right time. All right. But you got to push yourself past your own rationalizations and kind of make the commitment to change. Also, it's $7. If you cannot afford $7, I'm not trying to be rude, but if you can't afford a $7 thing, then you shouldn't be trading because you're not trading with risk capital, obviously. But Thomas, I'm not sure this will work for me. Well, you're 100% right. If you're not coachable, if you're not willing to make a change, you're not willing to commit to learn how to do it and put in the time and the effort that it takes, then it's not going to work for you. But we've helped thousands of traders around the world, and the ones that do commit and put in the effort and take the time, it does work for them. The other thing is I need to talk to my spouse. Honestly, this is one of the number one excuses I use not to justify doing things or justify not doing things. Many times it's really just that underlying fear of commitment. What if you actually do give it your all and you fail? That holds people back. And I don't want you to be afraid. That's why we lowered the barrier to entry for this so low. You can come through. It's $7. You can cancel at any time if you don't want to do it after you start going through the workshop and stuff. But we believe that you'll come in and you'll start to learn and you'll see the value and you'll want to stay a member. And like I said, it's $97 a month afterwards. You said for $7, it's a no-brainer. Yeah, that's what we were trying to do. So again, you're getting the entire Naked Trading Mastery Workshop, the full workshop that people literally paid thousands of dollars for. You're getting 3 live trading rooms. By the way, the workshop is on demand, so you can get that and start watching it today. Watch it this afternoon. All right, as soon as you get signed up, you'll be able to log in and start watching it. You get the Tuesday evening Q&A session. You get the trading acclimation course. You get the nightly swing trading videos, the weekly outlook videos, both chat rooms. All of this, $7. Okay? So don't be that person that just sits around, never makes up their mind, kicks a tire. If you want to do it, do it. If you don't, like I said, I'm not going to try to pressure you. Yeah, we got London session up and running. Gary's in there running it. Gary, by the way, he is phenomenal trader. He has grown an account faster than anybody I've ever seen. He took a he took a $30,000 account and in 2 months made it just about 200 grand trading during the London session. Well, he trades London and US session, but he runs the London session trading room. Great trader. Okay. I work during the day. Are live trading rooms recorded? No, they're not recorded. But if you're working during the day, that's okay. You can still get the end of day swing trading videos. You can still come to Tuesday night weekly outlooks or the Tuesday night training sessions. You can still have access to the chat room, talk to people throughout the day. There's people in there all day long, every day, and that kind of thing. So, and also if you're working during the day, you're not going to be day trading. So you don't really care about day trading setups. What you care about are the longer term setups. How is Naked Trading Mastery Workshop? Naked Trading Mastery is, I think I did it 2 years ago is when I recorded it. When do you exit a trade? So if you're using the strategy we talked about here, normally I tell people to start off with just a 2-to-1 reward risk. Take whatever your risk is, multiply that by 2, and that's what your target is. So if you're risking $100, make a $200 target. If you're risking $1,000, make a $2,000 target. The reason I tell people to do that is because if you're doing 2-to-1 reward risk, then you only have to be correct on 34% of your trades to be net profitable, which makes it much easier to get into profitability quickly. Because I mean, that's only being right on 34 out of 100 trades. That's nothing. Do we do swing trades as well as day trades in the trading room? Yes. How long is the special available? All day today. Again, $7. You have access to it for 30 days. So you have an entire month. Sign up as we speak. Do you have stocks watch list or a scan? Interested in options? Rob, Dave does. Ask him in the room on Monday. I don't know how he has it set up though. Dave Aquino is a phenomenal trader as well. He's also another guy that started off in the trading room. So Gary and Dave both started off in the trading rooms with me, and we brought both of them on as trading room moderators because they're just such good traders. Do I have to use a special charting system? No, you don't have to use a special charting system. You can, especially with price action trading, you can use any platform that has price bars. The link is bctnow.com/try. If you need help, you can always call us at 919-935-0010. If you need help, that's also on your members area right here. If you get stuck, call or email us 919-935-0010. And here's in your members area, by the way, here's last week's recording from the Tuesday session. This is your welcome video that just explains everything from the members area. Naked Trading Mastery. Here's how you'll access the live trading rooms. Here's your daily videos, your weekly outlook. Here's any courses if you end up buying any additional workshops or anything, you'll access them there. Any indicators you purchased would be accessed there. The Tuesday office hours are accessed there. So everything, this is kind of like your home base to go to. Yeah, Alex, they do. I'm in, Thomas. Sounds good. Robert, glad to have you with us. Look forward to seeing you in the room on Monday. Is there any other payment besides credit card? If you want to do PayPal, shoot us an email, support@basecamptrading.com. We can do PayPal. Support@basecamptrading.com. What room do I run? I run the futures room during the U.S. London overlap. So I run the futures trading room from 8 a.m. Eastern until about 11:50 Eastern, 20 minutes after the European session close. After 1 month trial and submit good performance, is there a better price per month if we continue? So after a 1 month trial, it's $97 a month. Honestly, that's, in my opinion, a tremendous deal. I don't know of any other membership where you're going to get everything you're going to get here. 3 trading rooms, the workshops, the Naked Trading Mastery workshop, the Tuesday evening sessions, the acclimation course, the chat rooms for $97 a month. And again, if you want to cancel, you can cancel at any time. Just go in there and click cancel. All right. So hopefully you all learned something. Hopefully this helped. Yes, Gene, I teach futures. That's what I specialize in, is futures. I'm going to do, probably in 2020, I'll be doing a workshop on options, doing seasonality, how to trade seasonality. And we'll look at, because, for example, natural gas has strong seasonality. You can trade UNG, trade options on UNG, trade seasonal trends in stocks using options as well. So I'll teach a workshop on that. But hopefully y'all learned something. I look forward to seeing you in the trading rooms. I will see you all on Monday. As I'm based in Asia, there's a huge time difference. Any suggestion on how to participate in live trading rooms? Jason, the Asia trading session overlaps with the London session, so come into the London session. That would be like your afternoon. Once you log into basecamptrading.com, go to the members area, and right there at the very top of it, that top middle tile right here, Naked Trading Mastery. That's the workshop. Go there. Like I said, it's several hours long, and it's broken down into bite-sized pieces. There's quizzes and things that go along with it. Gary, these were all done using futures. Some of them were on option, or some of them were on equities. So you could have traded with options. You just would have traded Delta 70 at the money or in the money. No problem, Hayward. You can still join the trading room and everything else, though. I run the U.S. trading session. Yep, I'm in the United States. But that's it for today, everybody. Have a great rest of your weekend. Happy Veterans Day, and thank you for your service to anybody that's in the military. And until next time, everyone, happy trading.